The members of my private hedge fund and investment club have experienced some tremendous gains if they followed my recommendations. Right now, the stock market is continuing to go up, but the volatility, the VIX, is going up, spiking up with some 100-point down days, sometimes due to political or one-time events. And we also are seeing very large rebounds upward, 100-plus point days in the Dow after these negative 100-point down days. Technically, a fundamental technical, the breadth, there are a lot of companies making new highs in their stock price. There are a lot of companies reporting improving earnings. And the trend is, stock market's going up. Whatever the trend is, you can't beat the trend. To try to explain the trend, what's causing the trend, the fundamental reasons, well, basically it's earnings. Another thing is the worldwide economy. Fundamentally in Europe, a lot of European countries, Greece and the surrounding Britain, they're in worse financial shape than the U.S. government, and that's hurting that part of the world financially. And what goes on in Greece will spread to the rest of Europe, and it could come here. But one thing about the United States, no matter how fundamentally much in debt our U.S. government has taken on and put us into, we're still better relative to almost anything else. So that alone will prop up the United States. Relativity. The government has taken on trillions of debt, unprecedented. And fundamentally, this should drive up interest rates, make interest rates higher, the cost of debt higher, because there's so much of it, and it should cause inflation. And fundamentally, that should have negative effects on different companies, and it probably will. And there are ways to avoid losing money and to make money under any circumstance you may come up with scenario, and that's what we try to do, is do research and come up with what scenarios will possibly unfold in the future and try to not lose money and make money under those different conditions. There's an old cliche, sell in May and go away. Well, this is May. Cliches like that may have some sort of historical correlation to prove that if you actually do that, statistically you come ahead. But right now it's a unique situation in the world's economy, in the stock market, United States economy. And so you just have to play, these seasonal trends, these cliches that people have developed. There may be some use for them, some truth, but also they should be taken in their context as to the details and facts of what's going on today, next week, and then next month, next year, because that's what matters now when we make decisions. All of these factors should be considered, but right now stock market's going up after a large down, a bear market. We've been slowly going up. Now we're experiencing some volatility with some very large up days and some very large down days. It seems like the down days are based on one-time events. So after those one-time event down days, we've had some very big up days. And these down days have not triggered an avalanche of downward in the stock market. So, you have to go with the flow, whatever it is. And I think the flow right now is basically going up. And there are fundamental reasons why, specifically the U.S. government debt, the residential housing market, the number of houses in foreclosure, jobs. Those are fundamental negative things. And fundamental positive things is there are a lot of companies that are increasing earnings and earnings drive stock prices. So no matter what you do, you got to keep your eyes open. That's what we do here at the LearnABetterLife.com hedge fund and investment club. Another area, besides the technical analysis of stock prices and stock volume and different things, breadth of new highs, companies, is the sentiment, the bullish sentiment, the bearish sentiment. These are indicators that when everybody's in euphoria, that's the time to sell and go away, and when everybody's negative and bearish, that's the time to jump in and start buying. And there's some truth to that. And right now, a lot of sentiment, a lot of things I've read and researched show that the sentiment is too bullish. There's too many people, too euphoric, too bullish. And that's an indicator you ought to sell and go away because it's gone up too high, too fast. But it's not falling. The down days are not triggering the avalanche, the downward movement, and it just keeps on going up. So all these things are valid reasons to keep your eyes open and beware that, the stock market's going up. Price-earnings ratio of the stock market. A friend of mine told me the price-earnings ratio of the stock market was low. He heard on the radio in Chicago. I hear there are different price-earnings ratios, the calculation, current, past, future price earnings. And of course, in a bear market, price-earnings ratio needs to go below the historic normal price-earnings ratio to signify the bottom in a bear market. I mean, when the stock market's in a bear market and it gets real high, the stock prices are high, the price-earnings ratio is abnormally high compared to history. And statistically, in equilibrium, to go back to the norm, from a very high price-earnings ratio to the historic, which signifies the top, to signify the bottom, you need to be below the normal price-earnings ratio. And our price-earnings ratio, from everything I've seen, is still higher than the historic price-earnings ratio for the stock market. It's not as high as it was. It's down, but it's still higher than the average historic. But the stock market's going up. It keeps going up. Earnings keep on coming out. And, the government stimulation, bailout of some companies, it's trickling, it is working, it is trickling to make a lot of companies have better earnings. And that's what it's all about for stock prices. So, in general, I would say right now, the trend is up and follow the trend. That's how you make money, because you can't beat the trend. I've given you different reasons to explain why the trend is what it is and why you should be aware of what the trend is fundamentally. And fundamentally, technical, fundamental, the breadth of the company's earnings are reasons the trend should exist, and perhaps investor sentiment and too much over optimism is a reasons to beware and for a fall. And of course, which is more important? Well, the most important thing is earnings. That's basically the most important thing in the stock market. Interest rates is very important. And fundamentally, those should probably go up. But right now, the trend is up, and that's what we're telling our people. And we're showing our people how to make a lot of money. You've got the opportunity to join our group and make money. See you next time.